Is Bitcoin about to see a massive move to the downside? In this video, I want to be preparing you for this crash, what we can be looking out for, the early warning signs, and really just sharing, as always, my knowledge, insights, and these upcoming setups, so you are fully prepared for what is about to come. This one, though, I do have to keep really short because I'm running very low on time. I have a quick around 10-15 minute break here, and I thought I'm going to do a very quick update for you all. So I hope that you thoroughly enjoy this one, and we're going to start off right where I left off my last YouTube video, which, if you did listen carefully, you will have been prepared for what happened, and you could also be in a very nice short trade. So let's pick up right where we left off of this last video, where we were so close. We were so close. We had just front run the CC and that range point of control. So I was saying I was not in a short at this point in time. At this point in time, I had not taken the short off this high. I was not in short trades, and I was looking for another new high to be made. On that next high, what was I looking for? Well, there we go. That potential fake out of the high and coming back down to tap into the range point of control, to tap into the CC. And that is actually exactly what happened next, by the way. We made a new high. We came back down, and actually, to be honest with you, ended in a simple swing failure pattern of this high. So price came up in that mini range type formation, took a swing failure pattern of this high, tapping into the CC Fibonacci, which, if you look carefully there, $117,928. We tapped into the point of control, we tapped into the CC, and we got a local swing failure pattern. Like this guy said, if anybody watched that last video, they are either in nice profits right now in the short trades, or, you know, like we were saying, very well prepared for that drop. And so I make these videos to prepare you for these outcomes. You know, I'll be honest with you, my preference would have been to take out $118,000, that big psychological level, but this was a trade setup in itself. So I'll just show you this on a 5-minute chart. This is what the likes of the market, it's not really relevant what we like to see. At the end of the day, we got a valid trade setup, and you know, when you're given that valid trade setup, you've got to take it at this point in time, right? So you can see here, that was the previous high. That was the previous high here. And you can see here, if you look very closely, you can see a swing failure pattern of this previous high. So this was the high that we come up, took it out, come back down below, took it out, come back down below. That gave the short trade setup with a swing failure pattern of this high into the point of control, into that CC Fibonacci. And I mean, if you shorted this retest here, we're talking about literally an invalidation of 0.1%, the smallest percentage invalidation that you could have got on that swing failure pattern. So, you know, it was in the end a pretty, well, I would say a simple swing failure pattern into the point of control, into the CC Fibonacci. Again, I would have liked to have seen $118,000 taken out. We still could take that out, but again, that would have just been another level of confluence into what we have already had, which was a swing failure pattern into the CC Fibonacci, into the range point of control. Okay, so it was enough confluence, you know, to take the short trade. Well, as I did, and I guess others did as well. So, you know, with that said, now we're going to be starting to move on. Well, of course, we can all see we've had a big drop to the downside. Wasn't all wins. I actually did end up taking a long trade of around 114. Oh man, it's been a while. I remember I took a long trade, might have been 115, 100, I think I would have took it around 150. I can just remember I did take one long on this drop. Of course, I'm out of the trade now. I got stopped out the trade, but you know, it's not all wins, of course. I did take a loss here on a long trade, which I believe must have been around this $115,200 zone. Yeah, I think if I was remembering correctly, I was looking to see if we could hold the higher low structure, and of course I got invalidated on that long, stopped out, losing trade. So, you know, it's all about, you know, when you see a nice trade setup, you got to take it. It's not about winning every single trade. I'm not here to, you know, pretend that anybody is winning every single. You know, it's realistic, it's trading, and you know, that was a long trade that I took, which of course got stopped out. And this is the key thing here, having risk management in place, right? When you see a short trade setup here, you know, you say, again, I just want to emphasize this, but this is, you know, it's a valid short trade setup, right? Swing failure pattern into CC range point of control. You know, if price had ended up doing this and rising again, well, you got stopped out the trade. Again, this invalidation of this trade, what we're talking about, 0.07, 0.1%, tiny invalidation, right? You shouldn't really be, you know, it's not really going to affect you too much. And it's the same on every single trade, whether it's a small invalidation like that or whether the stop loss is 3-4% invalidation, for example. Your dollar risk is the same on these trades. It's just your position sizes are changing. And this is all down to risk management. But yeah, the loss that I took on that long trade, it really didn't bother me. And as we were moving down again, well, the move down from 115 to $111,600 was very quick. There was one key level that I had around $113,500, which I did not take the long on, and that was really simple. No reaction at the level. There's no trade to be taken, right? So we were looking around $113,500 as a key level of support, which was our uptrend anchored VWAP. But this is what I will always say: why trading the reaction is very nice, because as you can see here, that price just gone straight through that level, right? So there's nothing to be had there. Well, personally, I did not take a long here, as we went straight down through the level, and that really brings us up to where we are right now. And this was actually a really, really, really nice trade setup that we actually took this morning. And so yesterday, with that large move to the downside, really quick from 115 down to 111.6, but we had this daily level that was front run. And I just want to say how clear I made this to the champions. So yesterday, I went into the group in the morning. I said, let's fill the large wick at $111,500, and the confluence is the daily level. That is what I'm feeling is the highest probability, most likely thing to happen. So again, just so you understand this, we saw this large wick to the downside yesterday. I then go on to tell my team, I'm waiting for $111,500 daily, fill the wick onto the actual daily level that was front run. That will be the one and only long trade that I'm looking for, and I feel it is the most likely. Again, a lot of people might be thinking, oh my God, we're going to miss the long as price breaches above $113,000, but there's nothing for me to do, say, or anything else here. Remaining patient for this target. Okay, yesterday morning 10 a.m. that's the target. That's what I'm remaining patient for. Yesterday at 3 a.m. well, this would be this morning at 3 a.m. still remaining patient for the target to be hit. Nothing to do here. That's the target that I'm looking for. It's the one and only thing. Extremely clear. This is what you get in chart champions. No ifs, buts, maybes, but this is the level. This is what I'm waiting for, and I am not going off of that unless there's a reason to in the charts, which I hadn't got. And then we actually hit that target that we had given over 24 hours in advance. That level was hit and the reaction was perfect, as you can see here. And I did take a long trade there. I have already hit take profit 1. I have now got my stop loss at entry. That is a risk-free trade now on the rest of that long. Okay, so now I think it's very nice to say. And again, this is the power of trading the charts. Look at this, my friends. I just want to emphasize this because it was absolutely amazing. That high where I got the short from, what was it? Swing failure pattern of the high. This long, what was it? Swing failure pattern of the low. Of course, this maybe just does this and I get stopped out of this long trade. Well, guess what? That short trade's still running. Or maybe, eventually we get a massive pump to the upside and I get stopped out of this short and I still have that long running, right? Just really wanted to emphasize here that the power of the swing failure pattern, right? It was the exact reason of the high. And again, there was confluence up there, right? What was the confluence? It was the point of control. It was the Fibonacci. And then what did we have down here at the low? It was the confluence of the daily, of the filling of the wick, right? These are high probability trade setups. And, it's not hindsight analysis. This is all given in advance, exactly what I'm looking for. So, if you like what you see, chartchampions.com, that's all I'm going to say there. Because we will teach you each step of the way, everything that I know. Well, not just me, but the coaches as well, Igor, Severin. We got a whole team of traders here. So anyway, I digress. And I will be moving on to what are we looking at next. Okay, so again, I'm in a very comfortable position where I do have a short from the high. I do have a long running from the low. So a comfortable position to be in. But what do we feel is happening next? Well, I think, to be honest with you, I am leaning towards, well, I would like to see, I suppose, another move to the downside here. To be honest with you, again, I'm in a comfortable position where I have the long from $111,500 daily, but I am liking, let's say, to see another move to the downside. So there's a few key reasons that we got going on here. Of course, we are holding up this local range point of control. We are holding up the value area low here. So I understand, well, we're on that zone of the value area low. We're in a little bit of a slightly difficult position, let's say, because it's not extremely clear. It's not extremely clear. Like, this is a very strong support, or this is a very strong resistance, right? It's a little bit of, we got minor levels of support. We got some, well, we don't really have much resistance here. But I just think in terms of what I would like, or what I feel is a good new trade, well, my preference is always going to be lower, right? And so I would say I would prefer lower. Would I take a short trade here at $112,000? No. I would not take a short trade here at $112,000. Just like in my last video, would have I took a long trade up here at $118,000? No. When we were rising up here, the one and only trade I was looking for was a short. And now when we're down here, the one and only trade that I look for is a long. I will never be looking to take longs while we're up here, and I will never be looking to take shorts while we're down here, because I only look to short rallies and I only look to long drops. So the one trade I'll be looking for, well, I'm already in a long, of course, you know, from the daily level, $111.5 thousand, but in terms of a new trade, I will only be looking for a long. And again, if we are to see more of a drop to the downside, feel the key invalidation would be a reclaim of $115.5 thousand. But while we're below that, I don't see a reason why we cannot look for another move to the downside. And I'm really, really liking this zone of around, well, really between $111,000 to $110,000. This would, for me, would be classed as like this sweet spot, right? So just as again, this was pretty much to the dollar, by the way. So if you actually line up this absolutely perfectly, so you can see from the exact high there with the magnet tool to the exact low, $117,924. What I like to do sometimes is then copy and paste that value, move it along here, and then you paste in that value. And so just so you can absolutely see the pinpoint accuracy of that one, that was the ever so slight front run, and that was the absolute touch of the CC, right? Just wonderful, 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 wonderful. But what I'll be looking at on the same perspective here, well, let's pull the CC again, right? From the exact dollar low, let's come up to the 4 hour, exact dollar low to the exact dollar high. We can see got a very similar situation. We got a very similar situation. Here we slightly front run the CC. Here we slightly front run. We come in and we hit it. We have a similar situation here where we have got a potential bit of a 3 valleys, right? 1, 2. We could get this nice type of trade setup. We actually do make another new low. That's why I'm not getting too excited with this long that I've taken. I've not got too excited here because I'm prepared for another new low. And it isn't in that preparation, right? You were well prepared for the drop. Right? It was preparing you for the moves. It's not, this is definitely what's going to happen next. I do not have a crystal ball. I do not have, you know, the answers in that regards. But I'm very good at being prepared for these different trade scenarios. And that doesn't make me a genius. A lot of people will say, well, Daniel can never be wrong because he's prepared for many different scenarios. And I kind of think that argument is a little bit, I'm not sure. Like, people try and say that in a condescending way, right? Oh, Daniel's prepared for everything. So well, in a way, isn't that what you want to be, right? You want to be prepared for these different trade scenarios. So when one of those trade scenarios hits, you are prepared and you can make profits. Imagine I was not prepared for a drop. Well, then I'm stuck like a deer in the headlights when we see a swing failure pattern of this high, thinking, what am I doing here? I'm not prepared for a drop. I've just got totally wrecked if I wasn't prepared. But I was prepared. I was ready. I was ready to see a drop to the downside. I would have been ready to see new all-time highs if we had got a reclaim of $118,000, which was for me a massive resistance zone. So I'm prepared. I'm prepared for if this was the low and we get reclaims of $115,000, and then I think we will make new highs. And I am also prepared for if we are unable to reclaim 115K and we make another new low here. Right? That's not me being a genius. That's just doing what a trader should do and be prepared for these different trade scenarios. Again, I can be aware of everything, doesn't mean I'm going to be trading everything. Okay, let's say, for emphasized, but let's say I have 10 different trade scenarios. Well, maybe I end up only trading 2 of them because the other 8 are like, I don't like the reaction, the order flow's not good enough, the trade happened while I was asleep, etc., etc., etc. So of those preparations, I'm not going to be trading every single one. But I will take that preparation and then I will mix it in with the required ingredient of that reaction, right? Of that high probability entry trigger. And again, what are we talking about here? Entry triggers, swing failure pattern of the highs, swing failure pattern of the lows, lovely entry triggers. Again, if you really do listen carefully, then think I'm offering a lot of information for you here. So again, I am understanding of the low. I think the key resistance is for sure sat around $115,000. I mean, we just got that absolutely stat. Look at that value area low, weekly naked point of control, daily naked point of control. We also have a daily level itself. That's a massive stacked resistance there, right? So while we're below that, why would I not be prepared for another new low to come? If we do get another new low, I'll be totally honest with you, my preference would be down towards $110,000. Again, I am prepared for us to hit this and get a bounce to the upside. I am prepared for that level. Maybe I even get a long off of this level, and I'm prepared for it to get stopped out and invalidated and we make new lows, right? It's this preparation, it's this understanding of the market. Let me tell you this. This is a quote from I forget, isn't it? Mark Douglas, a trader I thoroughly respect. Unfortunately, he is dead. Rest in peace, Mark Douglas. But I learn a lot from him. And Mark Douglas said, the markets are totally random. There's no way of having 100% probabilities. And I totally agree. And I think this was like a really big lightning bulb lightning bulb moment for me, because you have to understand. And let me, I give all praise to first of all to the Lord, and second here to Mark Douglas. And I say Mark Douglas was very intelligent with his way of trading, his way of understanding the market. So you have to understand, and I speak from his words here, and I say the market is totally random. What do we mean by that? Well, what I mean by that is I'm prepared for, let's say, 10 scenarios. There are a million different scenarios of what can happen, right? We can have high probabilities. Yes, we can have very high probabilities, but there are no 100%. So if there are no 100%, essentially that means the market is always a random probability. And if the market is always a random probability, even the best trade setups can lose. And some of those trade setups you're like, oh, this is a risky one, they can end up being the best. And so that is why we have to have a systematic approach. We have to know what levels we are ready and waiting for. We have to know the entry trigger we are waiting for when that level is hit. And then we get the most important part, which is our risk management. We're not going all in. We're not going times 100 leverage. We're not risking the bank for one trade, because that trade is always a random outcome. Thus, we should position size accordingly. Every single trade should be under the same amount of risk, because, well, if you kind of get the point that I'm talking about here, every trade has got a random outcome. But again, I digress and I end with this. Like, random outcome, yes, but I'm talking about very, very, very high probabilities that we are getting within the realms of the trading. For example, front runs of levels, right? The last exact high, I managed to short. The exact long, I managed to take the long. Right? This was levels called, 24 hours in advance. You can come and you can tell me the market's random, and I can, of course, acknowledge and understand that. But I will tell you, the market can be predicted, the market can be beat, and you can be a champion. If that's of interest to you, you know where to get it, chartchampions.com. We'll end by saying this. If you want to be for my understanding of my current exchanges, I am forever and always on Bybit. If you want a non-KYC globally available exchange, we now have got a new partnership with Blowfin. So this is one for, for the people in all these countries where there's restrictions, right? This is a nice non-KYC exchange. And then the nice all-round option is BingX. So if you're interested in any of those three, of course, we got links for advantages for you via the affiliate links in the description. And if you want the educational side of things, chartchampions.com. We are just simply the one-stop shop for all of your trading needs. Thank you ever so much. Hope you've enjoyed. And I will catch you in the next one. Cheers. Thank you, and goodbye.